the cattle markets have been improving tremendously, and at the current time, I mean, there are reasons to think that prices could soften, and there's reasons to say prices should continue higher. Part of those reasons have to do with what Aaron's already discussed, and the other side of that is just really, really strong consumer demand, and we're going to kind of focus on those things as we go through this. But we always want to show prices have been and where we think they're going. We still have the volatility in the market, futures market up, down, up, down. I think Morgan Wallen has a song called Up, Down, but it's talking about something totally different. But still, this volatility, it's nothing to be concerned about until you actually physically have to sell cattle. We do know that drought is continuing to impact heifer retention and cow slaughter rates or cow cull rates, and that will bode well for prices in the coming years for these calves and feeder cattle moving through the next few years. I do think that margin operators are going to have some opportunities. The problem with that is they're going to have higher input costs, especially buying these cattle at higher prices. And if feed prices stay elevated, everything is going to, it's just going to be a lot higher investment, and there's no guarantee that the return per head will be any higher. So essentially you're putting more capital into it and getting a smaller percentage return on your money. Could potentially be the situation that we run into, and the international market has been very, very strong. So these are the four things we'll kind of look at here. But looking at finished cattle prices to start off with, there's a lot of talk about how can these prices go higher? How can these prices go higher? Why are these prices going higher? And it really just simply consumer demand has been really, really strong, both internationally and domestically. So as we look at this, typically this time of year, we would see finished cattle prices starting to soften. I mean, that's what would historically happen. Now, if you look back at 2021, which is the dotted line, you can see where prices in late summer started up and they kept going up. Well, that was to reach the levels that were
Well, I think we just lost Andrew. So let me just
no, I'm back.
Oh, there he is. Okay.
I'm telling you, it's a mess. It's been on and off all the time for reason. But anyway, I think you can see that again. And so what we've got, I expect slaughter cow prices to continue strong. I don't expect them to decline late this summer. That's my point. And so they're not going to see a lot of decline. They should improve, especially as we head into the fourth quarter. So the calf prices, typically this time of year, calf prices are starting to decline. So here's 5 to 6 weight steers, and I don't think we're going to see some huge decline this fall in calf prices. So people buying cattle realize that prices are not going to get super soft. They may decline a little bit in October and November, but you're going to be paying pretty good prices to buy them and put them in a stocker operation. Guys selling them, you still have to manage around what prices could be versus what they're going to be. And so selling them a little early, a little lighter may be beneficial, or selling them a little later, a little heavier may be beneficial, because prices will dip in that October, November timeframe, but I'm not expecting them to decline to their seasonal tendency because we have such a short supply of these calves. We really started to see it run up. This is, again, auction run 700 to 800 pound steers, and we don't see a lot of these cattle going through the auction. But if we look at video lots selling through the state of Tennessee, for the most part, our 800 pound steers are selling on par with the CME feeder cattle index. which, I mean, you know, essentially you're talking about a zero basis on a 750 to 800 pound steer. Now heavier cattle will have a negative basis relative to the futures market. But when we're selling on par with the CME feeder cattle index, which represents an 800 pound steer, it's hard to complain about that. And I see no reason for these prices to break unless corn skyrockets to $8 and finished cattle prices decline. You know, we'd have to see those things happening, and I just don't think both of those things are going to happen at the same time by any stretch of the imagination. Slaughter cow market continues to be pretty strong. I mean, we've had other regions of the country that prices have declined tremendously, and that's because of how many cattle they have going to market in those regions, and those facilities not necessarily need, you know, being able to harvest all those animals when they're being sold. So, you know, that the prices have declined, but we've continued to see strong prices for slaughter cows. If you've got them, sell them. You know, there's no reason to hold on to them because they have a pretty good salvage value, and the heifer that you keep may be more valuable the next 3 years producing really good calves, because the prices for calves are going to be higher. Beef continues to be high. So we've got heifer slaughter up 4.3% and beef cow slaughter up 14.5%. Still slaughters down. So again, this goes back to the point of, what are we doing with the cattle herd? Well, it's shrinking, it's shrinking, it's shrinking, it's shrinking. And we're going to see a huge decline in the number of beef cows when January 1 rolls around. We're going to see a huge decline in the number of beef cows. And well, what does that mean? Well, that means we're going to have a lot fewer calves next year. We got fewer calves this year. We're going to have fewer calves next year. And more than likely, we're going to have fewer calves in 2024, I guess that would be. And so that's boding well for these calf prices to really skyrocket, because we're going to have fewer animals out there and available. So that's put beef production up slightly, and pork production's down slightly, and broiler production's up slightly. We've got a lot of meat, but consumers are still demanding this meat. And that's when you see high box beef prices, high retail beef prices, and we're producing more beef than what we were. I mean, demand is strong. Demand for beef is strong. Will that break? I see no reason for it to break. That's been the question since coronavirus started. Coronavirus proved to us that beef demand was really strong, and we have not seen a break in that demand since the start of that, which that goes back to 2020. So for 2.5 years, we've had strong beef demand, and there's no reason to think that it's going to not continue to be strong. It's strong in two different ways, both export market and domestically. We've reduced the number of imports here the past few months. A lot of that has to do with the fact that we're killing so many cows. When you're killing as many cows, we don't need as much lean beef imported. Now, what does that mean in the future? Well, when we start retaining more heifers and retaining more cows for a little longer, we're going to be importing more beef in the future years. When we start retaining these animals, let's just say it starts next year. What's going to happen? Well, we're going to have to start importing more lean beef to go in our grind. And so this value will ramp up. If we're having this same discussion a year from now, that value is probably going to be higher, because we're trying to retain more cows and more heifers to increase the cow size, or the beef herd numbers. But if you look at exports, we're producing a lot of good quality beef. We're continuing to export a lot of beef. Last year was a really good year. If you look at the dotted line, and then the solid blue line shows what we've been doing this year. But these exports are going to remain strong probably through the end of the year, especially as we continue to kill a lot of animals. So we still have Japan and South Korea holding those top two spots. China is number 3, and then Canada and Mexico are distant 4th and 5th as far as where our exports going. And like I said, we'll see these imports start to pick back up next year probably, and exports will probably slow as we retain more heifers and keep more cows in the herd as we try to regrow that herd. Box beef prices have been pretty range bound this year. uh, essentially in about a $40, $30 to $40 range, but really at really strong prices, and no reason to think that they won't continue to be strong. This is where the situation really is when we look at this terrible drought situation. This is why we're not retaining more heifers. This is why we're um, killing more cows. And when you look at a lot of cattle country there, and we finally started getting some rain in Middle and West Tennessee. But as Aaron said, a lot of these rains aren't doing any good to help the crop. Sure, pastures have greened up, but hay is going to be in short supply. I was talking to a producer earlier this week who said they only have about half of their hay needs for the year, and they don't know how they're going to come up with the other half, which is in the neighborhood of 800 more rolls or something. So, it's going to be tight half supply. Hope for being able to stockpile some forage this fall. Corn prices remain elevated, which means it's pretty expensive to feed cattle in the feedlot. Hay prices are going to be high. And so all those things are going to put pressure on feeder cattle prices to some degree. So in other words, feeder cattle prices could be much higher if feed prices weren't so high and if hay prices weren't so high. So the fact that commodity feed prices are high, hay prices are high, really putting that downward pressure on these calf prices and feeder cattle prices, even though they seem to be improving, they could be much higher. But anyway, it's expensive to feed cattle, and it's going to continue to be expensive. We can't count on the corn crop really contributing enough production to lower prices. So we're going to be in this environment of higher feed prices, which may be good for the cattle industry from the standpoint of maybe we won't go back to a 2014 to 2016 standpoint where we see really high prices and then we grow the herd so quickly that we see a huge decline in prices. Maybe we'll do it at a little slower, more steady growth rate. This is set for futures market. Trade 185. The feeder cattle index is high 170s. Maybe hit 180 this week. I hadn't looked at it this week, but the feeder cattle index is really strong. Feeder cattle prices are good. Look at November. Seeing even higher prices later. So the market is expecting prices to move higher into months into the winter, and they're over 190 going into January, and those months, and I think one maybe March was trading at 194 or something like that. So prices are certainly higher. Finished cattle prices, we expect finished cattle prices to continue strengthening. Next spring, prices should really be going and blowing on. Put us at these type levels for lots of steers and heifers and some calf prices going through the next 6 months or so, 5 to 6 months. So you can kind of see where you are on those. And with that, I'm expecting at least 3 years of higher prices, and we'll see how that moves.